Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, January 14th, 2026. It is 9:47 a.m. Eastern Time. As I'm starting the video, and here's what I'm going to do. I'm going to start out with, as I often do, with coverage of the broad markets, mainly focus on QQQ, and get into, I want to go over some of the individual stocks that I like right now, sectors, including the consumer discretionary. I've highlighted those in recent videos. Several individual stocks and some new ones today. So let's start out here. Won't spend too much time on it, but I do want to also touch on the market leading, what I call Mag 8, Mag 9, 10, whatever you want to call them. Usually top 8 are all you need to cover. All right, so this is QQQ, again, 60-minute chart, go to swing trading time frame. We've just put in our most recent divergent high here on the 60-minute. QQQ continues to grind around, a lot like the S&P 500 and going nowhere from many months now. And unlike the S&P 500, QQQ has failed to match or take out that previous high. And the key salient technical levels to watch right now are that uptrend line comes off the late November low. That gives you that line, and this line here give you a what we call a bearish rising wedge pattern. We've already had I've highlighted two sell signals recently. The break of this minor trend line right here, followed by a hit of my first target. Perfect reversal off that. The typical reaction off the initial tag of a target. That's why multiple targets are listed. And then the marginal new ever so slightly higher high, followed by that second sell signal I gave you yesterday and break that other minor trend line. And then this one, again, guys, minor trend lines, minor sell signals. More significant major trend lines or longer term trend lines equal a more powerful sell signal. All I can tell you is we are now at my that same level. It was support here. It was support before we even got there. The fact we had a reaction helps to validate my 618.38 support level. So you have dual support right now, right here, and plenty of longs and bulls on the site. If you're looking for areas to buy dips that I haven't seen a better one in a while. Likewise, if you are short or partially short or not short yet, looking for an objective entry or add-on point, it would be a break there. Obviously, as I like to say, the redder the better. I'm using a blue tool, but let's just say that's a big red candlestick. You go down through there, even if it's an intra-period stick, meaning within the 60-minute candle. Don't forget, the first candle of the day is only a 30-minute, even on the 60-minute chart. What I mean by that, there's 6.5 hours in a trading day, so the 9:30 to 10 is your first 60-minute candle first candle on the 60-minute time frame. And then after that, they go in hour increments, and either way. So my point is, if you wait for a close on the period you're trading, in this case, a 60-minute close below, that helps to increase the odds that the breakdown will stick. In other words, it minimizes the chance of taking a whipsaw, which is what we call a stick save. That's when you have a candle like this. Let's just draw it here. And then that's the body. And then here's how final. You dip down below. This is called the wick. Tail when it's down below. It's also known as the shadow of a candle, the skinny part. It's called a wick when it's above, and when the shadow is below, it's a tail. So the tail goes through, and then you print back. That's called a stick save. There's your solid body right there. Again, the advantages of waiting for a close on the period you're trading. It helps minimize whipsaws. The downside is, and I'm going to get into that right now in this video, guys. I think there's a potential for a swift move. Complacency is so thick, bullish complacency, you can cut it with a knife right now. But more about technicals. Bullish complacency can continue for some time. It can get even more bullish. But I'm going to get into the charts right now. So there's a level. First and foremost, I trade off technicals, and that's it. So next sell signal to come there, and SPY, the S&P 500, right there. You have a comparable trend line. You have similar trend lines on the futures. That trend line also comes off those November lows right there, late November lows. Nice, well-defined, and that's it. one of the best looking setups I've seen in a while. These are all divergent highs, little corrections. And again, this is one big fat wedge pattern right here. So take it, don't take it. It's also a part of the continuation of the trade that we had on QQQ. From a longer term swing perspective, I would speak on multiple time frames. We already hit our first target here. We bounced as expected. Didn't even take out that previous high, and that's still the next swing target on this time frame. You can also see your uptrend line right there. It's the same one I just showed you on the 60-minute charts. And yes, this is still support. It was when we shorted it here. The fact we had a reaction off it further validates it as support, but also tells me that the fact we've already hit it and bounced off it kind of gives me that what I call check mark, meaning it opens the door that next time around, whether we bounce again or not, it's going to increase the odds that we're going to go down and hit my second next swing target there. And then I'll talk, if we start moving that way and we test those 200s, or especially if we take them out, I'll refocus on those longer term trend targets I gave you. A couple other things. The Magnificent 8, let's talk about those. You have NVIDIA. NVIDIA is starting to crack. I haven't updated this chart in a while. I cover it in every time I cover the big market leaders. There's a potential trend line there. I say potential because I'm not super crazy about it, because you only have 1, 2, and now 3 reactions, but 3 is a minimum that you need, and we had a couple bounces off there, and that's starting to crack right now. I haven't been shy or wishy-washy on my thoughts on NVIDIA or the market. I think it has a potential to be a major top here. I know I'm in a very tiny, ever-shrinking minority camp on that, but that's it. I still have long-term targets for you there. And I also noted recently we have this potential. Again, I call it potential. When you see question marks, that means, is that maybe? It certainly has the potential to be a head and shoulders pattern. That's a neckline right there. If you're not familiar with what these are, I encourage you to look them up. Head, right shoulder. The bearish engulfing candle here on the weekly, that big red candle right there, which is a potential topping stick, would help support that case, because you can't violate, if it's a head and shoulders pattern, you can't move back up. You can have 2 right shoulders. You can have 2 left shoulders. You can have 1, 2, but you can't violate the head. Now, again, potential. Why is it potential? Well, you have to finalize the pattern with a full move back down to the neckline, as I have drawn here, right? So if we continue lower, it's going to also bring us to the 200-day moving averages, which on this weekly chart we're on are 40-week moving averages. Super duper support, especially combined with this trend line and that head and shoulders, potential head and shoulders neckline. That would be NL. I'll add that later, neckline. And to take the measured target of any head and shoulders pattern, you simply take the widest point from the top of the head to the neckline and add that, which I've done here, to that level. Doing that would take us to this level right here. It's I've had it on my chart for a while. 130.60 price support. You can see I created that. Maybe not. Did I add that recently? Yeah, I must have. The 10th. No, a year ago. I'm sorry. We're in 2026. Okay, so yes, I added that line a year ago, a year and 4 days ago, on November 10th. And it also aligns, as you can see, with the this yellow line here. These are Fibonacci retracements. If you look at from that move off the 2022 low, if you put up the fibs from the low to the high, that neckline, that comes in with a 38.2 Fibonacci retracement. So you have both price and Fibonacci support there, an ideal target. What would that mean for NVIDIA? It means by far, without a close second, the world's most important company right now, both with AI and both with the stock market due to its weighting. That'd be a 36% drop off the high. So I think you're going to get a nice correction if that scenario plays out. So first things first, you want to see continue downside to form this right shoulder, ideally on increased volume. That's a criteria for a head and shoulders pattern. They're one of the most easily recognized patterns, but I think traders are too quick to, because it's easy to spot that form in some variation or another, but you want to confirm it with volume, and that is the two criteria, volume criteria, only ones you need are increased volume on the drop down from the head, which you have here. And then you also want to see an increase in volume on that formation of the right shoulder. It just helps to validate the pattern. So we'll watch for that. All right, let's move a little faster here. There's a lot I want to cover in this video. So there it is. We're still within the trading range. Again, this big purple box. Sorry, I rolled my mouse up and banged the click button on something. All right, NVIDIA right there. So we'll see. Again, the fireworks, if and when we take this level out, that's when fireworks begin in both NVIDIA and the stock market. Alphabet, one of the strongest right now, having leapfrogged in the AI race with the rollout of Gemini, the latest Gemini version, whatever it was. And there's your primary super duper. This is a very well-defined trend line, guys. Lots of reactions and kind of a sweet setup there. Look at that big negative divergence. You can see there. Marginal new and divergent high, just like the S&P 500. What my prediction was, and still is, that any new high would be a divergent high and set the stage for a much larger drop. Where to? I mean, you can see all these marked support levels. At minimum, we're going to come at some point, guys. It's not me, and this isn't bear speak or anything. Even if this is the super duper never-ending bull market that a lot think it is, and 2026 is going to be a rocking year. All stocks come and eventually visit their 200-day moving averages. I can show you this by putting this indicator up here. We'll just turn the lines off, and let's move this box over just a bit so I can grab my indicators. Percentage above the 200-day moving averages. This is it. So I've covered this indicator before. That's what this histogram shows. I'm going to draw a line here, and you can see pretty much in the past. Here, let's put a horizontal line up. This is the level where Alphabet gets too far away from its 200s, and that's about as far as it normally gets, and then it comes back and checks them. These are tests. This is a drop back. At the zero line, you've come back to the 200. This is, we haven't even seen this, guys. We're in bubble territory. Most have given up on that narrative, but believe you me, I have not. So. And I'm going to speak to that in a minute. I saw some comments recently, the usual, my God, guys, I'm going to get to it towards the end of this video. If not, I'll cover it in another one. If I haven't given more long trade ideas in the last year, 6 months, quarter, consistently, almost all of them, if you take them collectively, have blown the stock market away. The stock market, remember, has gone nowhere for months. And then some come out and post as if this is the only trade ideas out here, shorting the market. No, and it's not. So we have a lot of, and I'm going to cover some individual long trade ideas in this video, and one of the best sectors right now. All right, so let's move on. Apple. This is what I want to talk about. As I mentioned earlier in the video, the potential to see a pretty quick move down. It's going to take a lot off guard. You're going to have the bubble heads on TV coming out, and they don't know what happened, and blah, blah, blah. And they're going to assign a cause. So what, technically speaking, other than what I just showed you on Alphabet, we're not at risk right now at this moment. If it starts going down quick, we can take out that trend line, yes. Apple, we shorted Apple when the rest of the world wanted to buy. Voided our the suggested stop. Guys, remember, suggested stops are just that. You may use your own. These are based on, at the time, entry prices and typically the final price target, unless I state otherwise, using a favorable risk-reward ratio. And I tactically place my stops where I think that they're just out of range of stop rates and things like that. All right, so either way, we hit recently the first target on that Apple short. And we have, as I highlighted in recent videos, a formation of what appears to be a bear flag continuation pattern that consists of 3 parts: an impulsive move down known as the flagpole. And to get the measured target, you take that flagpole, the length, and you add it to the top of the bear flag before it breaks down. Now, it hasn't broken down. That's why I do these videos. I do everything. I try to get these things out in advance. I loathe hindsight analysis. I loathe when somebody, I'm not going to tell you, oh, I shorted XYZ and, made 30%. Here's why. No, I want to get in front of these, and they're not all going to play out. But you have to replicate these levels, because if, let's just assume it might not even, you know what, guys, if it does this and Apple comes up here and starts going up, then it's not a bear flag. If it breaks down and it's impulsive, it has definitely the form and the potential to be a bear flag continuation pattern now, but you need that sell signal to trigger on a breakdown below the pattern. And we're right on there. You can see that now. And so if it does, let's just for shits and giggles say that it does break down and plays out as such. Well, bear flags tend to play out. The move down, if it's a true, proves to be a true bear flag continuation pattern, the move down tends to mirror the move of the flag pole leading into it. And so what that means, I'll quantify it for you exactly. If, again, it's a big assumption. That took 1, 2, 3, well, you can count the candles, 1, 2, 3, 4, 5 days from the high, spike high. And by the way, we're big green that day. It was probably some news-related event, and it got sold hard. So that could put us in 5 days down to my target down here, or the measured target, or my third price target. And if that were to be the case, again, just go with it, that would be a 7% drop. Okay, but we haven't triggered that sell signal yet. And as I've gone through these, NVIDIA is still within its trading range, Alphabet's still above its primary uptrend line, and Apple is has yet to break that bear flag, although we're certainly, so far profitable on that trade, and it has peaked like many other market leaders have already put in tops. Again, I've spoke to the whole baton thing, the market passing the baton from tech to financials, and the glass half full, glass empty. You can embrace whatever narrative you want. I'm just going off technicals here. And as I've been saying for, 6 months or more, I haven't seen an all-in moment or an aggressive short moment in the market in a long time. Just little sell signals and evidence that, would warrant a partial. Again, I'm speaking to the longer-term swing trend trader. Partial short positions, you need to see the majority of these Mag 7 break, and then you can go more aggressive. And we're right on that. I think we're right there now. Remember, you don't need all 8 to break down. You need the majority to break down. So now Apple's already topped, broken down in that bear flag. Here's Microsoft. Again, a lot of these guys peaked and did so with bearish technicals. That was a divergent high, breakdown, backtest of the uptrend line right here that comes off this low. And this one has been testing those key, very key 200-day moving averages. And as I said, what you want to see is you want to start to see it walk away from there to show that the bulls have given up. They've, and bears have won. Again, early. This is early on that because we're not much below the recent lows. But that's what I like to see after testing a key resistance level from below. You like back testing a trend line. You want to see that impulsive rejection. That helps. And you can see right here, I have a price level I put in here, about 460, 670. It's pretty much this trading range here, right? That trading range is the top of it's defined by price resistance, 493.50. And it's pretty much just a test of the 200s. We've been pinging around on the 200s, right? And as I always say, when you're testing them from above, which you are here, you got to give it the benefit of the doubt. It's not unusual to see brief 1, 2, 3 day, even a couple week cuts underneath. Again, the redder, the better. The farther you get away from these, the more it gives me a check mark on Microsoft that it has now lost its 200s. And again, you put up this indicator, and this isn't rocket science, guys. This is what I do day in, day out. If you look at this indicator, this is, again, that percentage trading above the 200-day moving averages. We're going back as far as I can roll my scroll wheel on this daily time frame on this charting platform. So, again, guys, not rocket science. There have been 1, 2, other than these are just tests, these tiny little red. And now we're just crossing. Now, again, this may just be whipsaws. It may be a successful test. We may do that. That's the bullish case. If you believe that, if you think this market is not going to correct much right now or anytime soon, this is where you buy. And this is what I do day in, day out. I tell you, if you are bullish, this is an objective area to go long. And if you are bearish, this is a level to watch to see if Microsoft starts to move away and get this histogram clearly red just out of this kind of what I call whipsaw, testing range. And again, this is not rocket science. We're going to look at, going back as far as I can. There have been two bear markets, whatever you want to call them. Again, semantics, if you want to use that definition, it was a drop of 25% there. And here it was a drop of 39. So we'll call them corrections, bear markets. Either way, you wouldn't want to bend long from a 39 to a 40% and a 25% drop. And if you were a flexible trader, you would have wanted to be short. So that's all, guys. I'm just trying to show you. I'm seeing more and more of this, and that's why I put such an emphasis on these 200s. They're very, very, very simple and effective trend indicators. They're just not exact timing indicators. If you try to short or get out of your longs every time Microsoft pulls back and tests those 200. So again, further we get away from there, and it's not just Microsoft. Look at all the market leaders. Here's Amazon. Let me put my lines back on. There's your uptrend line right there. We need to break coming off that divergent high. And not far, you can see Amazon recently successfully tested its 200s. Again, we can do this all day. You can put these indicators up. Do you want to be long or short there? Do you want to be long or short there? And it's so watch for a crossover. If we cross over, there's the 200s right here. Then that signals a likely trend change, which is good for a swing or trend trader. Even if Amazon's going up another 100% in the next few years, you want to trade those corrections, which are well into the double digits. And God forbid, when the bull market finally does end and we have the next bear market, one of those seemingly little correction signals, if you want to call it, indicating a 20, 30, 40% drop, may turn into something much, much larger. And will at some point, guys. It's a certainty. It's near certainty. Okay. Broadcom. Again, I'm just clicking the market leaders. Sell signal. A lot of these I've gone over recently. So I'm going to move a little faster here. There's that trend line. We still need to trend line and price support. This is just a topping, what to me looks like, based on the technical postures, topping. You see the sell signal there, and once we take that out, you have the 200 days just below. I'm not going to keep putting up that 200-day indicator. You can do it yourself and see. And here's one Meta, which is clearly now lost the 200s. Again, I said I wouldn't put it up, but because Meta's below it, I will. That's it. So there's a lot of I give indicators ratings, and on both their accuracy and simplicity. You can get as complex as you want on using buy and sell signals with multiple indicators, multiple conditions, but this is just pretty simple. Do you want to be long or short when Meta's below the 200s? If you just had a trading program that said put me in Meta when it's above the 200s, you would have blown away the performance of Meta by sidestepping the big corrections, bear markets, and the stock market, of course, as well. But that's it. So I wanted to say Meta has been. This isn't a whipsaw. I mean, we've been under the 200s. If you want to ask my opinion, why Meta hasn't gone down harder and faster, like when it lost the 200s right here, I tell you, it's everything I just covered. It's the remaining 7 of the Mag 8 stocks. Remember, indexing is everything these days. When money flows are there, money's coming into the market, or at least it's consolidating, it's not going down much. Meta or any of those Mag 8s only going to go so far without the rest of the lot. When the majority of them break, then the sell programs start hitting. People start taking money out of the 401ks. Stop losses on longs get hit, and then you get this, right? And if you didn't heed the warning back then when it lost the 200s, you wrote out a 73% drop. And you made your money back. But one day, these bull market corrections, if that's what you want to call it, are going to the primary trend is going to change, and it may take you a decade or more to get your money back if you ride out a 73% drop. And I say that because I know the buy and hold or buy the dip mentality is so ingrained right now. It just plays into my longer term view on the markets as to just how long and painful it's going to be for people that have embraced that mentality. But again, guys, I go day by day, minute by minute on what my positioning is, regardless of my rhetoric. Long term, I'm positioned on the daily charts, the 60-minute charts, long and short. Right now, I'm just trying to share with you the most significant developments. And so I see Meta walking away from the 200s. See, this is a breakdown, back test, back testing for a while, and starting to walk away from those 200s, which to me is a positive. It's another plus, if you will. You got to have a lot of check marks or pluses, to make a bear case with so much and with such a resilient bull trend in the broad market, especially with that sector rotation. Again, until the financials break, solidly break. Oh, I need to get to those. The case can be made that this is just healthy sector rotation, and maybe these Meta and the others will recover their 200s. Tesla walking the line right now. I gave you this uptrend line recently. Not much more to add. Set an alert. If it breaks that trend line, the farther it gets away from it, the more likely the breakdown is to stick. If you just want to, for kicks and giggles, when you have a bearish rising wedge pattern, which is what this consists of with the divergence line there and the trend line, you take the widest part of the wedge and you add it to where it breaks down. That gives you a measured target. I'm just ballparking it right there, but that would take Tesla back for a test of the 200. So again, a test of the 200s, because it got so far away, is going to be a drop of anywhere from about 23 to 28%. So no sell signal yet. Also potential bear flag pattern too. If you look at this way, you've had a pretty sharp drop off the highs right there, right? In Tesla and it was a sell signal again, highlighted at the time, I believe. You had a breakdown there, and you take that line. I'm just sloppily drawing this. Put it to the top of the flag, and yeah, that also calls it back down to the 200s. Okay, moving along. I think we're paced pretty good on time. Just trying to cover the important stuff. Somebody asked about this yesterday. I posted this chart. I've covered the financials quite a bit recently, and fully acknowledging they have passed the baton. That's I can't call it the sole reason, but the largest reason that the S&P recently made a new high, and the market-leading, NASDAQ 100 didn't. Again, the baton was handed away from tech. I've talked ad nauseum about glass half full, glass empty scenario. Yes, the glass half full scenario, or case can certainly be made. Healthy sector rotation, and even if the financials correct now, if tech picks it back up, retakes the baton, yeah, it's going to take QQQ to new highs. It's going to even take S&P to new highs, even if the financials drop. Remember, the financials are the second largest sector. They're dwarfed by the largest, which is tech. So that's why even if the financials correct, but it wasn't just the financials lately, but it was, again, due to their weighting. Yes, you can say they were most responsible for taking the S&P to new highs. However, in my recent coverage, I've said be on the lookout. I suspect this breakout to new highs and the financials will fail. I highlighted a sell signal there, a breakdown of a minor trend line and a back test, which with the rejection I like to see. I always say a back test of a trend line in itself isn't bearish. You can make a case to short it, but what you really want to see, because you can keep back testing for a while, or sometimes you regain the trend line. But what I like to see, and what I have seen now, is a pretty impulsive rejection off the back test. And it's, this is just a back test from below. If it can solidly get back above there, yeah, that's going to be bullish. But yeah, right now you have to, once you lose the 200s, you got to realize different things are going on. And this was mostly a sideways correction. But let me put that back and get to the rest of them. I just pointing it out that, yeah, it was objective long here at support or on the breakout, but not at the 200s. It may get rejected there. PG looks a lot better. See, I like these that have been beat down. Again, I've been talking about this for the last year. If you go back in the last year, Pepsi, there's a lot of the bluest of blue chips that I've highlighted, and we've done very well on those. That's been my comfort level for individual stocks. Beat down blue chip names, whether they're U.S. blue chip companies or the Novo Nordisk, Danish company. These companies that are well established, very good, decent or good solid balance sheets, dividend paying stocks. And you can see this is what folks have been gobbling up lately. And the technicals, guys. I don't, try to catch bottoms if it's just a random dart throwing thing. You want to look at stocks that are beat down at support. Again, I've covered this one in recent videos. That's nice long-term support. This is where the stock has bottomed. The buyers have stepped in since 2023, and we had a little undercut. And the fact we recovered back above it, that's even more bullish. That to me is more bullish than just a perfect test and reversal. Why? Because these dips below are what I call stop raids, bear traps. They suck in bears that say, oh, it's lost this support, it's going to go down. I don't know who'd want to short a stock so oversold and beat down, especially blue chips. But when you get that recovery there, it washed out the weak-handed longs. Now, guy, I'm going to say this. If my call is right, I've been started the video talking about the potential for a 20-something% at least drop in the NASDAQ. You're probably going to see a lot of these guys get taken down with broad-based selling. Redemptions from the indexes. If QQQ goes down, SPY goes down, the S&P 500. So we could get another test of the lows in these guys. So again, they were highlighted a couple weeks ago. A lot of them have popped and made pretty big gains. Again, blowing away the stock market recently, but many of those are hitting resistance. Procter & Gamble still has plenty of room up to test the 200s again. Let me just go to the rest of them. KO, there's Coke. I don't have much of an opinion on that chart. PM, Philip Morris. Here's one that, it's been moving up, but look, currently back testing this uptrend line I just extended. Plus, it's taken back the 200 right now, but not by a large amount, not by very far. So if it can continue on up, there's the next resistance. And again, you have less downside. Pepsi, I know we had a trade in Pepsi earlier. It must have split or something. Where'd all my lines go? Well, disappearing trend lines, but I still have the chart. So we bought Pepsi right here. We sold Pepsi right there. At the 200-day moving averages, downtrend line resistance, third target, and that's it. And so these are the type of trades we've been playing for a while. And again, I don't know why all the lines went away. I don't see a split on here. That's weird. Either way, it doesn't matter. Let me move on. All right, so that's it. Philip Morris or Altria Group, divergent low recently. See, so we had a divergent high. It broke down from that, had a sell signal, lost the 200s. So this is it, guys. Here's my analysis as I'm going through these real quick. A couple weeks ago, I highlight a few pop, and I still think they have the potential to bottom, but they may take another jog down. A lot of them, like this one, although there was a divergent low, nice pop, it's rallying back, and look at that perfect back test. Look how well this guy trades to the 200s. In a bull trend, I'm going to go back a little bit. Bull trend, you're above them. These are the 200s here. I'll use a line tool. And then we took out the 200s right here. That started a bear trend. Rejection, back test, rejection, rejection, rejection. And then right here, we recovered the 200s. So I'm making a mess of this. I'm trying to do a circle tool. And we've been above the 200s and this downtrend line right here. So let me use my circle tool. 200s were taken back for good here. Test, test. And then they were lost right here, and this is a back test. So this is why these may be bear market rallies in these guys right now. So like I said, I'm a little more lukewarm and kind of based on my outlook on the market near term right now. And everything I started the video with, you might want to hold off if you didn't catch any of these recently. That's it. And I'll keep an eye on this sector. And at minimum, I can say this sector has a lot less downside risk than the broad market, especially tech and financials. Because God forbid we start getting some real economic indicators coming in, some not, the CPI. I can't get into it in this video. I can show you an article I just read. I can show you my CPI indicator, pretty much a commodity index, and tell you that the numbers yesterday were absolute bullcrap. The cool CPI, but either way, we can agree to disagree. market liked it, and that's all that matters. They're going to go off that anyways, so it gives the Fed room to stay easy. But again, I'll cover that in another video. All right, let's move on. There's that MDLZ. Again, hit the first target at the downtrend line. Those are the other targets I gave you in recent videos. And as promised, I'd give you some that I like. This is also a defensive sector. Packaged food. I believe this was also one of Jay McCallum's the ones that he asked about. It went on to make a marginal new, but still divergent low. Remember on the reply that was a couple weeks ago, there was only one I liked at the time. That was the MDLZ that I just showed you, and that one already hit our first target. That one I said was actionable. The rest in my reply was that there was probably a little more downside likely, and that was based on both the daily but in large part the weekly charts. So here's GIS. You can see it's in what I call technical no man's land. It's got really nice, better support. It has support, period, at $41, and it's halfway between that resistance former support level 48.50. So on all these I could see, and that would be nice. We get a market correction, take these guys down, and then enter or add to any of those positions. So that was GS. Campbell's, I think, was another one of the ones he asked about. I'm on a weekly chart here, and so that was my reply back at the time. And you can see they've come down a little more. And so these are the guys that you can buy some blue chip companies. And look, if the market's really going to take it on the chin, yeah, you're going to go down to these next support levels there. But if you're looking for long trade ideas, again, it's all about risk reward. The downside on these is a lot less than the semis and Nvidia and Meta and all those guys. What else did I cover? Did I do GIS? GIS, again, General Mills, potential unconfirmed divergent low. So I'd like to see these come down a little bit more, get in this buy zone, take out the trend lines, 200-day moving averages. So that's it. So that's what I like, but would prefer to see a nice correction coming up because the market really needs it, and get these guys at a little better prices again. And I'll highlight the ones that hit support, but those bounces are likely to get sold into, like MDLZ. Like I said, it's at the MDLZ downtrend line now. This is where, on the weekly chart, the divergence, but so we hit the trend line, T2. These are all resistance levels of 200 days, and it could certainly jog down, and we'll look at it later. Okay, what I'm going to do now, and what I like to do from time to time, is go over the comments. I get a lot of trade ideas, like I've mentioned here, from you guys asking me about something that, I'm not a computer. I'm not a machine. I can only watch. I do watch a lot of charts, a lot of sectors, a lot of different indicators, and but I can't see them all. So I keep those coming. And sometimes it's just you asking, my 2 cents on something. I'll be, oh, I really like that. Or, you know me, if I don't have an opinion or a strong one, I'll tell you that. And if I hate it, I'll tell you, look, you were looking to go long, and I'll short it, or the other way around. All right, so let's get to some of the questions. Okay, and some of these I might not even have gotten to today. So let's see. Here's a comment under here. Breakdowns. Okay, it's just a comment. Yep. And so far it looks legit. But like I said, the redder the better. It's a start, certainly, in the financials. Here, I'll zoom in so you can see these better. All right, go back to the previous post. Gold, a lot of comments here. I know I replied and gave some charts here. And again, I encourage you to come into the site from time to time and check under the comment sections. If I miss something, which sometimes I do, these things get buried, I'll typically go back a day or two, sometimes 3. But if I didn't reply to anything, just bump me in the next post that I make, the most recent. And, any chance for an update on the financials? Okay, this was yesterday. So that was it. That's what I just updated, XLF. And let's look at JPM, because I made mention here. JPM is the lead sled dog in the financials. It is by far the largest. It is pretty much the Nvidia, if you will, of the financial sector. and they reported earnings down so far, but you have this uptrend line. They need to break that, then the 200s, and this price support about 294. So work to be done. Certainly a start. When I see a big move like this on the daily, I take a look at the weekly chart. And you can see on the weekly long term, this is our primary secular bull market uptrend line. Started off the 2009 lows, broke it here in COVID, back tested, and we've been back testing from below. And again, I don't want to take too much of it. I just wanted to glance at the weekly. So watch JP Morgan if it can, if it starts to go down here, especially if it takes out the 200s, then the financials are in trouble, and that's going to wait on the S&P 500. Let's go back to that post. Thank you for your charts. Yeah, here's, if you're interested, Jay McCallum again, some OGN, VTRS, and ADM with replies here. You can check those if you want. VTRS, I didn't have much of an opinion. Again, you can read my notes there. I'm not going to spend a lot of time there. What else do we have? Semiconductors, and I made a reply yesterday to the semis. Here, I'll get to the updated chart. You can also go in there and see it, but this is it, SOXX. And I do want to mention this because in that reply, so SOXX is an ETF that tracks the PhilX SOX semiconductor index. That was the first go-to semiconductor index. It's been around since the 90s. It's the one I'll usually trade. It's the one I usually include in my analysis. But it is really, it's the NASDAQ 100, if you will, of as that is to indexes, SOX is to the semiconductor sector. And what I mean by that, it has a disproportionate overweighting of the top components. So a week ago, I checked the holdings. There's 30 in total, but you can see NVIDIA is 8%, AMD is almost 8%, Micron. So the top three alone make up almost 23%. So 3 stocks out of 30 make up, 10% of the holdings make up over almost a quarter of the returns. If you add up the top 10, you're at 56.23%. Okay? So half of the returns, over half, come from just the top 10 components. Now, this is the S&P 500, or the equal weighted, if you will. XXD, it's by Spiders, S&P semiconductor sector ETF. It's much more diversified. You have a total of 43 holdings, and you can see Micron 3.32%, the top holding, and goes on. So if I add up the top 10, 10 out of 43, remember, only equals 29%. So you can see this has not made new highs. Again, it's the same narrative. And it's fact that it's this unhealthy lifting of the indexes or sectors like the semis from fewer and fewer names, the top names, especially the NVIDIAs of the world and those around it. There's obviously NVIDIA stalled out. It hasn't gone down much. It's still, but you have the other ones that are picking up the baton now, and supposedly they're benefiting from AI. Those are the big names. So I just wanted to say that, in analyzing this, that it speaks to the breadth, if you will, the market breadth in that sector, and tells you that, although SOXX is at new highs, the rest of the semis, most of them are not and have not made new highs. Again, as evidenced by XSD. And, or, we go through, as I like to do, you go through the charts of the individual components. So see NVIDIA up there, as these are the largest ones. Taiwan Semi, and you can put little, here's your next sell signal to come on Taiwan Semi. That break of that trend line is going to take it down just like that one did, And again, these are big divergences that are building. So one of these seemingly little innocuous short-term trend line breaks, which have just usually good for 10% or so pullbacks, could be the one, or likely will be the one, that does the trick, just like here. DH1, DH2, DH3. Finally, a much bigger drop. From that drop, the stock fell 41%. Broadcom, there's my chart. You can see the levels. ASML, again, these are the big names. Micron just broke down. Sell signal triggered, if you're interested. AMD, trading range right here. If I box tool it, you can see it real quick. Needs to take that out. Back testing the trend line right here. That's uptrend line from below recently. What is this? LRCS, Lam Research, potential exhaustion gap. We'll see if that plays out. Still has divergent high. And but then as I click, I'm just going to go fast. I'm just going to click them all. And I'm going through an order market cap. Intel, it's gone parabolic really. Still has a big divergent high, negative divergence. And just indicates a big trend change is coming once the trend change sets in. KLAC. And you start going down the line, you see the underperformance of those, the rest of the semis. Texas Instruments, ADI is doing well, new highs there. Still divergent high. ARM, a lot of these guys are peaked back here in 2024. All right, so that kind of shows you the overall, a view of this. And this is, by the way, this is just on SOXX, which again is not that diversified. I do a deep dive. I go through XSD, which has a lot more individual components. All right, I'm at 45 minutes. Remember, you can always speed these videos up if you want to go through them a little quicker. But I'm going to stick with what I said I'd do, try to get to all the recent questions. Adobe, does it look good? You can read my reply there. I think Adobe, imagine why it's been going down so much is what AI is doing. I've played around. I have a Gemini premium subscription, and it is that Nano Banana, their image creating tool for videos, images, is just downright very impressive. And where it goes is, I can tell you, I've used it at home just to my wife and I were sitting out back by the pool, and we're looking to we've been teeter-tottering trying to figure out what to do back there. We want to add an outdoor structure, and I gave it a command, and it generated an idea that we were both blown away. We didn't even think of doing that. It kind of gave me my idea, but on steroids. And we're like, well, now we got to find a contractor to do that. And where I'm going with that is, man, that's not good for Adobe Illustrator. I know Illustrator's not all of what Adobe, it's all their revenues, but it's a big part of it. So Adobe has those image generation tools they've had forever and a day. They sell subscription-based models, and some of these AI image generation models are just really, you don't need Adobe Acrobat. But either way, look, I go off technicals. So there's the chart in my notes. We hit my first target already, and it's just it's testing the lows. And as I said in my comments, a lot of stocks, remember when Novo Nordisk hit the fourth target, I was leaning towards a pullback and a retest of the lows, and that's exactly what we had. And so, we bought it there. I mentioned my thoughts there. I'm telling you, I took profits, and with the plan to recycle back in, leaning towards a retest of lows. And when we got that, we had the positive divergence that we didn't have on that first low. And so that's what with Adobe, how much of the fact that AI is eating their lunch or eating into some of their products has been priced in. Now, think about it. This is the previous low. If that correction that I'm looking at comes, we're probably going to go down here. And you may not want to ride that out. If you took this trade on this, I think, where did we buy it? Here. You're probably going to do this because, again, birds of a feather. This is a part of I believe, component of the NASDAQ 100. And if the NASDAQ 100 drops 10, 15, 20% or more, it's probably going to bring Adobe down with it. And then so we can revisit that later. So point is, I'm just not, you can hear my voice cooling off on longs right now, especially if the next sell signals that I started the video trigger soon. And then we'll be looking to scoop some, cover those shorts and scoop up longs when the time is right. All right, let's continue on. We're almost there. I'm going to go back to about right here. A few more. Okay, I said I would give you my thoughts on CPI later. I don't think I'm going to get to it in this video. There's that update on stocks I just gave you. That was yesterday. Mag 10 big stock analysis was the next one. Let's see what I have here. Okay, thank you for that. I fixed that video. It was just I did something wonky on the upload. Got fixed. The video was there. Huge drop in corn. Thank you very much for that. I wasn't aware of this whole thing there. I read that and give you a thumbs up. Thanks. Okay, let's talk about this. Ian Mac, you don't comment often. When you do, they're usually negative. You're a subscriber. You pay me. You have free speech here. You can criticize trades. You can tell me why you don't agree with one. But when I read things like this is a violation of the terms of agreements and the site. You can check that under resources. Any type of here, we'll look at that for you. I need to state this, and I'm going to address this because when I see comments like that, number one, it's outright libel. If it's not, and you can look that definition up. So I was like, what is that? And I had to go check that part of the video to see what you're talking about. So your comments tend to be very trollish, and you can either address and try to clarify on what you were speaking, because I'll do that right now. If I missed something, let me know. Otherwise, the next trollish type comment that you have that's non-productive, and especially if it's not accurate, then you'll be blocked from the comment section. That's under policy and terms. You can check that here. Be respectful to others. Read about all that. You welcome all kinds of comments, feedbacks. I don't want a bunch of yes men on this site that see everything the way I see it. But posting is a privilege and not guaranteed, and so you will lose your ability to post if that continues. And again, if you want to support the comment, the reason for your comment, I'm all ears. So I would love to hear what you're referring to there. Okay, so I went to that point in the video, and it was exclusively talking about NVIDIA. Talked about in that video, and I need to explain this only because, again, it's outright libel. It's intention to make something appear different from what it was. I talked about shorting NVIDIA here. Talked about covering it here, along with all of the longs on high to low. And there's very few traders in the world that can do that, especially on a stock like this, the most beloved stock. Very few have dared to get bearish, and and a lot of people are bearish in rhetoric, but don't give you specific entry points, specific exit points. And here's how you do this, Ian or whoever wants to do this. You just simply go to resources. You can go to trade ideas. There's a couple ways to get their resources. You have a symbol tag. You can check, type in NVIDIA and VDA. You can also do it this way. That'll bring all analysis by date. You can also go to trade ideas, and that was trade ideas. It was a completed short. So you go to the archives here, completed shorts. And then you would go back to 2025. That's when that occurred. The part that I was referring to in the video that you said was ridiculous. And then you can go to NVIDIA, and then that's going to queue up all the posts related to NVIDIA short trade, not coverage of NVIDIA that was maybe in a video with other things as there. So you can go back, which I'll do here. Just point out the top was, you can see the top came right there in November. We equaled that top, so it never made a higher high in early January. And so you can go back and look at this post. Again, that was NVIDIA peaking in November of 2024. Gave you a swing trade, a sell signal. So we were short there. There were plenty of other short entries around that period. And as well as this was a daily chart with initial swing trading targets, but I'd also made very clear that we had long-term sell signals triggered and long-term targets. That was when we covered the low on April 6th, which I'm going to show you here in a second. We hit that target, one of the long-term targets. And that was the case for clearly stating covering that and all shorts and going long. So again, if you see things different, please bring it up in this under this post. So anywho, that was the short entry right off the highs, right after the stock, right around where the stock peaked in late October, November of 2024. with that was the targets laid out. And again, it made a double top right around the end of the year there in December. Some more sell signal triggered, back testing, additional short ops there, another short entry there. So shorting it all through, or late 2024, early 2025 as it was peaking, and then if you follow all these, all the evidence to cover the Nvidia short and reverse to full long, including but not limited. Got a few right here. Right here, futures in play. This one, just reiterating, long-term target zones have been hit. Same thing with the VIX. Second price target hit for a 11% profit. This is April 7th. Day of the lows. I might have referred to it as April 6th before. That was a Sunday. It was the morning of this right here. So this is when, and in all the comments there, mentioned all the reasons to cover those shorts, even though it looked like the sky was falling. And that was the Friday before. So we had everything fall into support. And Friday was the actual lowest close on the Monday the 7th, which I reiterated the longs and Nvidia hitting support as well, of course, on the long-term targets. That's when we had that big intraday reversal. So Monday morning we went down a little, hit the next targets on the NQ, and that was the end. And it was also a bullish engulfing candle, and it was T1 first price target. So these are still the additional price targets for Nvidia. So that was it. So I just wanted to cover that again because it was stated, and I wanted to set the record straight. So all that stuff's there. All this stuff's archived, guys. Nobody bats 1,000, not even close. And I don't claim to, but the big calls, when I make it, I try to differentiate on time frames, even sell signals that matter on shorter term time frames might get you in and only be good for a short-term trade lasting days or weeks, or the longer term ones. So if and when this head and shoulders pattern or those next sell signals I covered early in the video and the 200 days are taken out in Nvidia, it's going to increase the odds we go down here. That's just the initial, first, it's the first support level. These are still the same long-term targets that were laid out when the stock started peaking here. And all this is, when you look at the scope of the move, this is Nvidia's bull run here. It is very much simply a marginal new and still divergent high. Now, marginal is relative to the scope of the preceding move. Nvidia is coming off, since it peaked here, it's in a bull market. But even if you just look at this 2022 low right here, that's this current uptrend line right here, the blue uptrend line. That's where I've drawn the Fibonacci retracement levels. That in itself is a gain of 1,800%. So yes, this is a marginal, meaning relatively slight new high, still divergent high, bigger divergence, same divergences that were intact here. They've just grown larger. And therefore, it's setting up, in my opinion, the stage for a larger drop down to my next targets, which will be, if T2 is hit, it's going to be a 63% drop from the recent highs, 75, and then ultimately T4, 80%. And if and when the technical posture and what I believe to be the fundamental landscape, when that changes, I will let you know, and either cancel out these targets or be looking at something else. And even throughout this move, we've shorted not only that high, but we've also gained a lot of long side bounces on this stock, including this one back here. I had multiple targets. When we shorted it here, we hit my second target, and believe we also reversed and covered it and went long there as well. Okay, we're at the 55-minute mark. I went back far enough. I wanted to cover that one and mention that, again, guys, please, anything you want to talk about that you see something different, something I might have missed, feel free. If you want to criticize trades, especially on what gets me is that it's the same folks that criticize broad market calls because we're in a rip-roaring bull market. Even though every one of the short calls on the market have been identified by both the time frame they're at with different targets, whether it be at 60-minute charts. Sometimes we even had 15-minute chart trades on QQQ recently, short-term trades. Most, if not all of those, hit at least the first price target. This was the last 15-minute chart trade. We shorted there. We covered there. Most of them are on the 60 or daily charts, and they're commensurate to the time frame that we're trading there. So now, okay, I did that little thing where I paused the video, and I don't know where I paused because this screen recording software doesn't really give you a clear indication. But I just want to point out that since I started the video, we broke down the trend lines in both SPY. That's it. The uptrend lines triggering the next sell signals and objective short entries and add-ons until and unless these guys snap back and close back above those trend lines. So that's a failed breakout in the S&P 500. At minimum, it should take us to the midpoint of the range, most likely down to the bottom of the range. That's about a 6% drop, I believe. And then again, this range is getting very long in the tooth. So if it heads to the bottom of the range, I would favor a breakdown below it. And just like back here, as highlighted at the time, we had a multi-month consolidation range. I predicted any new high would fail, marginal new and failed breakout, which it was. Then you went and had an additional sell signal and after the failed breakout, and almost identical. Look, you had a uptrend line right there, right? And I highlighted that breakdown, went to the bottom of the range, then we broke down, then we back tested the bottom of the range, got rejected. So history doesn't always repeat, but it often rhymes. So let's see if that happens. Support 1, support 2, breakdown there. And if we go there, you're going to have the 200-day moving averages coming in, and you could see a much bigger drop. QQQ also took out the trend line. Again, I don't know where I stopped the last, paused the last part of the video, but that has now taken out the trend line. You can see it on the 60-minute chart too that I started the video out. So breakdowns there, QQQ 60-minute chart, SPY 60-minute chart. So any back test of the trend lines would offer an objective entry. If we regain the trend lines, that's near-term bullish. We'll see if it holds, but we haven't. That's all I can tell you right now as I wrap the video up. We broke down, and that should send the VIX up as well. VIX coming off that bullish falling wedge, divergent low, just hit my 1748 target, and these are your next targets of the VIX, especially if I'm right, we go down to the bottom of the trading range in SPY, then that's probably going to bring the VIX up to the top upper end of this trading range here, which is going to be a move of said and done just to get there about 70%. All right, I got to wrap it up here. I keep going. And again, I might have missed a couple things there with the pause button, but I'll try to, I'll look at the video when I get a chance and try to add anything in the comment section below. This has been Randy Finney with Right Side of the Chart. Have a great day.